Hey everyone, I did a post on Facebook a few weeks ago that gathered some information on the top 10 questions that a lot of people ask going through the process of home buying. So I wrote down some of these, and I think I have about 13 or 14 of them, and I wanted to give a very high level explanation to kind of what they are. I'm going to go through them in the near future, and create some more videos that are going to be very informational. I used to do a first-time homebuyer program class where I would have people come in on Saturdays, and it was just really hard for people to dedicate a couple hours on a Saturday to go through the process. So I'm really hoping that these videos and me creating this YouTube channel will really help for all of those folks that have questions that aren't able to get to something like that. And with all the COVID stuff, this makes it a little bit more interesting to do it from home and do it virtually. So what is a down payment? A down payment is going to be your portion of what you're going to be required to bring to closing, whether that be through a down payment program or gift funds or money out of your own checking or savings account. 3.5% is the standard FHA minimum down payment. So that would be 3.5% of whatever the sales price is. So it's really going to determine what program you're doing and what the percentage of the down payment that's required. So your loan officer should be able to help you with that whenever you're going through the process. So what is an escrow account? An escrow account is going to be a non-interest bearing account that we collect through your monthly payments that you make. Your monthly payment is going to include principal and interest, taxes, and insurance. It's also going to include mortgage insurance if that is required. But we do not hold mortgage insurance or private mortgage insurance, and I'll tell you the difference later on. We do not hold those in escrow. So as soon as you make a monthly payment, that goes into our escrow account. We immediately wire that out to either FHA or the private mortgage insurance carrier that's carrying that insurance. So the only things that we do hold in escrow are going to be your taxes and insurance. Do we have to pay for a realtor? No, you do not have to pay for a realtor. The selling person of the house would carry both realtor fees. It's no cost to you. I would say use one. They are amazing. They help you fill everything out. They know what they're talking about. They're very well educated, and they are licensed in that specific field. I get asked a lot of times, can you help me? That's not my expertise. Even though I've been in the business a long time, that's not where I'm licensed, and that's not what I need to be doing to help you all. So I suggest getting a real estate agent to help you through that process. When do we pay for insurance? We pay for 1 year of insurance on the closing disclosure at closing, and then we escrow for future months to make sure there's enough in there by the time you make all of your payments between that calendar year, and we get the next invoice to pay out enough insurance. So we pay for the first year up front all the time on the closing disclosure. What are closing costs? Well, that's a loaded question just because there's so many closing costs that go into the process, and I get asked all the time, why are costs so high? How do we determine them? I want to know them up front. There's just a lot that goes into that. Closing costs are all third-party fees except for our direct lender fees that we charge. Every lender has different origination fees. We have one, $695. But again, the closing costs are all going to be different based on your sales price, your loan amount. It's going to depend on the closing company that we're using, what they're charging for their fees, the appraisal fee, and so on and so forth. I will do a video in the future that's going to go through all of that in a lot more depth. Why can some properties qualify for FHA and some only conventional? Well, FHA is going to be geared towards turnkey, ready to move in, not have to do repairs whenever you move into the house. A conventional product is a little bit more flexible, so if there are a few minor repairs and things that need to be done, you would be able to sell a house as is rather than having to do all of the repairs before a borrower can purchase your house. How long is the process and can we close early? Our process, we say, is 30 days from start to finish. 28 if every person is on board. That means borrowers have all their paperwork, all the disclosures are sent, everything's done as soon as it's requested, basically. Can we close early? Yes, there are plenty of times that we get through the process as long as we can accommodate an earlier closing date. I personally would only like to ask for a rush if we can move up a closing date, if we have everything that we need, we're clear to close, and everybody's been through the file and it's been signed off on. And then I have no problem reaching out to my management team and asking for them to accommodate a rush. Now, as long as everybody can do that, then that's not a problem. Right now, during COVID, we're having a lot of purchases ready to rock and roll, and that necessarily hasn't been an issue. But like I said, it's better to request a rush once everything's clear and the file's ready to go. That way, it can all work out. I really hate being the person that says, yeah, we can do a rush, no problem, we'll have it done for you in 14 days, and then the appraisal doesn't come back in time, or the appraiser is booked up and it takes them 3 weeks to get an appraisal back. There's just different things that are a factor there, so it's just easier to ask for a rush or an earlier closing date when everything's in and everything's clear to close. What is the earnest money deposit, and is it applied to anything? So the earnest money is going to be your deposit on a sales contract, whatever that is, $500, $750, $1,000, $2,500, whatever you feel comfortable with. You pay that towards your wanting the home. Essentially, it's your deposit down on the contract that you are about to sign for the sale of that home. Now, it is held in escrow at a title company usually. Sometimes if it's a for sale by owner, the seller will deposit the check and it will clear their account, or clear the borrower's account. With that being said, I always need a copy of front and back of the cleared check and a checking account statement showing that it did in fact clear your account. The reason for that is to answer the part, is it applied to anything? It will go towards your down payment, so as long as we can process it and show that it cleared your account and it is your funds, that is not a problem. We cannot track cash. I get asked that all the time. If you use cash to pay down on the contract for an earnest money deposit, I'm not able to track that. I can't show it coming in and out of your account and prove that that's what it was for. So at that point, it would just be given back to you at closing. When is my first payment due? So typically you close on a loan. Let's say you close July 10th, 2020. You would have interest prorated on your closing disclosure for the days of the month that you closed from the 10th to the end of the month. And then at that point, you would skip August and not have a payment until September 1st. So depending on the day of the month that you close, you would have a prorated interest through that date in the end of the month, and then you would skip that following month and make your next payment within the 30 days. How much do I need to bring to the table? So again, that's going to depend on several moving parts. So you obviously have your minimum down payment that's required with whatever the product is that you're going to be using. We also have this part of the process that's called seller paid closing cost. A seller can pay up to 6% on an FHA purchase for the buyers, and so if they do that and they utilize the full 6% up to the max that they can, and they have paid down $1,000 earnest money, and you're only required to bring your 3.5%. I had a closing that happened where the borrowers were using our OFA program, which I'll talk later on about, but it's a first-time home buyer program, a down payment assistance, if you will, that gifts the 3.5% down. They paid $1,000 earnest money deposit, and then the sellers paid all of the closing costs that they were allowed to pay. So with the down payment program of 3.5% being gifted to them, and then the seller paying the other portion of the closing costs, they came to closing and walked away with their $1,000 earnest money. So if everything is negotiated properly and everything is calculated properly in the beginning, then you can utilize the max seller pays. Sometimes sellers are not willing to pay that, or there's a certain amount of money that they're willing to allot for closing costs. And if that's the case, then you're just going to be bringing that extra money to closing. But again, that's just more details, more information regarding closing costs that I will record in a future video. Incentives for first-time home buyers. So necessarily, I don't like to refer to them as incentives because we really like to try to be equal to everybody. We have programs that are geared towards first-time home buyers. If you're Native American, we have a 184 program that requires a smaller down payment. But that's also something that I shouldn't say we have. The government has that. Every bank has that option, I believe. I go down and teach quarterly classes for the Native American mortgage program assistance where they give the down payment. So I'm going to do a video, not a class, on that as well, and kind of go into some more detail for the Native American program. So really there's not any incentives per se because everybody has to be offered the same programs as long as they can qualify. We offer OFA. It's Oklahoma Housing Finance Authority, and then we offer an REI down payment program. Those are really good programs to utilize if you're a first-time home buyer and you don't have the down payment, but you qualify on their income, the area that you're going to live in, and the credit score and some of that criteria that they require. Those are excellent programs to use. So it's really just about sitting down with your person that you're trusting and to help you walk through that process. Like I said, I'm going to do future videos on each one of the products so that way they go into things in a little bit more depth. So that way if you're in Oklahoma or Texas, give me a shout. I'm happy to help you. I'm happy to sit down with you anytime, or we can do FaceTime, Skype, whatever. So how much money do I need to save? Well, again, that kind of goes into, depending on your credit score, you might need some money in the bank, which is called reserves. Sometimes we like to see that you have a few months worth of payments in your account after you pay the down payment, just to make sure that in case something happens, if COVID takes place, then you have a few months there to make your mortgage payment before something else can come up. So really, it's not about how much money do I need to save. You just need to either have the money for the down payment and a few months worth of payments after the down payment's paid, or you can qualify for the down payment programs that we offer and try to keep those liquid assets in your bank account in case something comes up. So FICO score or Credit Karma. Okay, so that's another big one. I had a couple come in and they said, well, in Credit Karma, our credit score shows 700. But whenever I pull their credit score, let's say it shows 600. The difference between a FICO score and a Credit Karma score is they calculate things way differently than we do. For a mortgage purpose, we use one of the earliest models that was created to base all of these criterias on to what a credit score would calculate out to be. We use all three bureaus, FICO score and Credit Karma. I don't believe that they use all three bureaus, and they look at the information a lot differently than we do. So they're just not the same. Your score could be 40 points higher, 40 points lower on Credit Karma than when you come in to get your mortgage pulled or your application pulled. I just suggest sitting down with somebody who is knowledgeable in this, letting them review your credit with you, pulling an actual credit report, and then we can go over everything step by step. So if there are things that you need to do to improve, then we can get you on that track and we can make sure that you're improved before you go to purchase a house. Difference between mortgage insurance and PMI. So you're going to hear those interchangeably. There's a lot of people that say it just as one, but really they're two totally different things. Mortgage insurance is what is on a government-based loan. FHA has mortgage insurance. It is on for the life of your loan. Unless you do a 15-year FHA, then you are able to get the MI removed at that time when you reach 78%. If you just do a 30-year fixed, that premium is going to be on there until you sell the house and get rid of the loan or you pay it off. PMI is actually private mortgage insurance. Now, private mortgage insurance is going to be a private company. There's several out there that we quote through to try to get the best premium, but they're going to be the ones who are going to ensure that if you do not have 20% to put down on your home, that is where the private mortgage insurance comes in. So it will automatically terminate at 78%. You are able to get it removed at 80%. You just have to write a written request. That's something that a lot of people don't tell you up front, is that at 80%, you can get it taken off. I will also do a different video on the PMI and the FHA MI because they are so different, and one's on there for the life of the loan, the other one's not. I get calls all the time that say, well, you know, so-and-so told me that my mortgage insurance was going to come off at a certain time. Well, unfortunately, whenever I look up their loan or they send me their information, they're on an FHA, so it really doesn't come off. So there's just a lot of details that go into that I think would be beneficial for a different video. So at that time, these were kind of all of the questions that I was asked, and again, I hope this answers some of your questions. I didn't want to dive into each one of them too much because I can really get going for a long time on them, just because there is so much information to each topic. So if there's anything in the future that you need, feel free to email me. My email is brookeGelein@firstunitedbank.com, and that's first spelt out. I'm happy to answer any questions that you might have and help you throughout the process. So stay tuned for some more videos. I hope I don't bore you to death and I can answer a lot of your questions. Have a great day.